Hi, I'm Antony, and welcome to another edition of The Interview. Today I have with me Dror Poleg and Antony Slumbers. They're both longtime real estate tech strategists. Antony's started and exited many prop tech companies before that was a term, and Dror is the author of Rethinking Real Estate, which is a book that I've been finding has been making the rounds on sort of the real estate cognoscenti space. Everyone's been talking about it, discussing it. So I thought that today would have them together to chat about the future of the office market. Now, historically, at least in the last couple decades, long-term stable leases in core cities has been as sort of rock solid an asset as you could think of, at least in the big cities. However, now with what's happened with the coronavirus and in general trends towards working from home, that assumption has to be questioned. And I think these two gentlemen are the perfect people to have to talk about that and see where it goes.
So historically, and especially over the last 30 years, office markets have become the darling of institutional investors. Mm-hmm. They're seen as something almost like a financial product, like a bond, something that you own. It gives you maybe not a very high yield every year based on what you pay for it, but it's a very stable yield. So, you get your 3.5% or 4 or 5% a year, depending on which market you're in. That yield comes from leases that are signed by companies with traditionally or theoretically very high credit and reasonable businesses that made very hard commitments to that landlord of the building. And you can expect that income to come in. And if there are any issues, you usually know about it very long in advance because you know when your renewals are and you know how much percentage of the building is getting renewed when.
It's a cash flow that is mapped out, predictable, and you can manage it in a way, right? You can manage, you can see the whole pie generally.
I mentioned in the book the notion of an elevator music in office buildings that is kind of like a description of something that is boring and tepid and kind of doesn't really bother anyone or doesn't make an impression on anyone. And I think that's a feature, not a bug, because office buildings are supposed to kind of be average and okay for everyone. And being average historically was a great strategy for office owners. And now we're starting to see that, the market is starting to split. And we started seeing that before the virus as well, where, you either have to be wonderful or you have to offer incredible value and like very, very low price. But just being okay is not enough. And that creates an issue, particularly for those owners that love office buildings, because a lot of them like to be very, very passive owners.
So you're talking about people like pension funds and sovereign wealth funds and all that, right?
Invest in real estate because they don't want to invest in an operating business that requires them to hire a lot of employees and supervise a lot of things. It's very similar to a financial product again, but once it starts demanding more things from them, they either need to start doing more or they need to rely on other people to do more and then share more of the revenue with those people. Mm-hmm. And even more importantly, once offices become a bit more like operating businesses, their cash flow starts behaving differently. So, if I invest today in Starbucks or in Marriott, it's a very different type of creature from investing in an office traditionally. So it might generate more revenue, it might grow faster, but it's much more volatile. It might not fit what I invested for.
Even if an asset is doing quote unquote well, sometimes predictability is more important for the end investor than the payout, right? So they say, no, I need X% every year. I don't need 2X and then 0.8X. That doesn't work for me and my investors. And I think that's the big thing. So Twitter just today said employees can work from home permanently, not what Google and Facebook said, which is till 2021, but permanently, which means there's probably a transition to all remote going to happen. Basecamp is another company that does that, Stack Overflow. So what do you think about the value of office space given some of these shifts?
The big barrier, the big block in terms of, which was largely for management, that I want to see my people, they need to be here. This is where the creativity has happened. People are actually discovering that, boom, that's not necessary anymore. What I think is really interesting, and I think is quite unusual with the tech companies saying what they're saying, is I don't think that is the optimum solution of it, just at home. Yeah. There's very few companies that I think will be able to work 100% distributed permanently. You have people like Automatic, who are like the poster child, 1,200 staff, 75 countries now, no offices, but they're Automatic. That's what they do, and they've been designed to do like that.
But that's the question, is working from home inefficient because it's new to us and because we're really we're dealing with a new skill almost, or is it inefficient inherently?
No, companies shouldn't ask themselves, can my employee be productive outside of the office? They should ask themselves, if I take the $15,000 or so that I spend on just putting their butt in a seat in an office and spend that on making them productive, including giving them a budget for, all sorts of satellite spaces and flexible spaces or whatever they want to install at home, or even extra money for that extra room or like little nook at home. What will happen then? Particularly if you design your company to work in this manner, so that you're not judging people or evaluating them based on whether they're present or not, but based on what they actually produce. And I think that for many people, the main thing that they'll miss about the office is the opportunity to come and sit somewhere for 6 hours a day and just do your email and social media.
Right.
When you're working from home, suddenly you have to produce something in order to show that that you're here.
Because measurement becomes even more important when your butt's not in the chair, right? I think that's the big thing. And there's some, what I liked about your book is that you try to question some of the basic assumptions and you go all the way into the pharaohs and all that. But why is the commute an acceptable standard in the Western world? I think that will be something that will come up now, right? Why is it considered socially okay to sit in a train or a car for 1 hour to get to work? And I think there's going to be family pressures and societal pressures to sort of move away from some of that.
Yeah, I mean, I think in some ways the commute was partly a bait and switch, I think, because, the workplace kind of evolved where I think people lived closer to where they worked in the factory, et cetera, in the center of the city. And then they moved to the suburbs and the job kind of stayed where it was, but they got cars and they got new highways and they got all sorts of incentives to drive. And obviously there were a lot of attractive things outside of the city. So they kept going to the city just because they had no choice, because that's where the jobs were. But if suddenly there is a choice, then you ask yourself, why are we doing this?
So let's talk a little bit about predicting office demand. That basically had for a long time a pretty straightforward formula. You get a sense of how many jobs there are out there. You break it down by geography. You get a sense of demographics, so how many people work in law, finance, tech, media, and you can start to get a sense of how much office space is required, right? Mm-hmm. Given where we are now, do you think there's a way to predict demand for office space in the next year or 2 years? If I were to build a new office building on spec, right? If I were crazy enough to do that right now, I just wouldn't know where to start. Like, how do I make the numbers work so I can take something into a bank and not get thrown out in 5 minutes?
This was sort of happening anyway. And if you take the London market, the last few years, any big company that was moving to about 20 to 35% less space than they were coming from.
Right.
And that was before we even started with any of this, mass distributed. So essentially, I would say everybody is going to take less space, but they're going to need much better space. And I think the whole mantra of the office market is going to change from trying to let the most space for the most time to someone to actually trying to let the least space for the least time for them and charge them appropriately for that flexibility. But we're going to need much better spaces.
I get that, but are you taking into account what has just happened then with people probably not wanting to sit next to each other, taking extra precautions, not just as long as this lasts, but probably for a little while, right? There has been, you have some data in your book, Dror, where you say, the average space per employee has been shrinking for the last few years pretty consistently, but are we going to see that trend sort of go the other way?
I mean, I think that a lot of the discussion now with landlords is very focused on the immediate short term or even the medium term, but like the near medium term. I see it in clearer terms. If it's dangerous to be in an office, it's dangerous to be in an office. Being 6 feet away or 10 feet away is not going to save you. Definitely if you have to take the subway and the elevator and you have to just be in the city in general just to get to the office. So I think a lot of that is just posturing. It's kind of like, let's pretend that we're doing something so that people can tell themselves that they're safe here. But if there's a real problem, then it doesn't solve the problem. If there's no problem, that's the question. Okay, how do we move to a new normal? And I think people wanted more space in their homes, in their offices, and in their hotels long before this virus hit. Mm-hmm. But they didn't get that space because it was too expensive for them.
Right, yeah.
So what has changed since then is that now people have even less money. They're even less willing to sign long-term leases. So, I mean, to assume that suddenly everyone will have a private office so that we have more space for everyone just because they want more space, I think I don't see how to make that work.
So what Eric Schmidt said, that may apply to companies like Google and other really well-capitalized companies, but probably not to the SMEs and the companies that make the bulk of our economy, right?
But even he said in that interview, everyone focused on the headline, but he actually said, we're going to have less people come to the office. We're going to have more satellites. So that notion of that central place that is called an office and where most of office building supply is currently located, that's not necessarily where people are going to go. Uh-huh. I think in total, there might be more space that is being used for work than before. But that space will be spread out in all sorts of new places. So it doesn't help the existing landlords to know that, okay, more people will come to the office, so they'll make use of more space. Because a lot of that space will be in new places, both in terms of area, and I think a lot of it will go into retail and other things that are currently underused that have to kind of find a new life for themselves.
People don't need to be in super cities to participate in super cities anymore, right? And that is the big scary thing. So New York City, long considered the world's probably alpha office market, suffers from a lot of the systemic challenges that might impact its attractiveness, right? So public transit is a big way that people come to work. Extremely high density, more than almost any other city in the world. If I'm a New York City office landlord or an office REIT, what am I thinking right now?
So I think the question itself shows you how much trouble the office market is in. Mm-hmm. Because again, if we're talking about a financial product that has very low yield, but it is assumed to be very safe, the fact that people are even questioning it so seriously is a problem for this. Because, you would say, okay, I wouldn't buy a 3% bond if I think that, it might be worth zero tomorrow. I would buy it if I think that, it's as safe as houses. So 20 years ago, you couldn't really ask that question seriously. People asked it back then as well. Oh, do people need an office? But it was clear that they do. But today, it's not even a theoretical question anymore. And that's where the crisis does come in with the virus, where, we know now how many people can work remotely, how many are happy about it or not. We also know that many want to go back to the office. But if at the end of this, we see that 20 or 30% are happy to continue the way things were, that's a huge blow to office demand and to the old structure of things.
If I'm SL Green or Vornado and need to go back for refinancing right now, those conversations can't be very pleasurable.
Yeah, I think it would go down to we're talking like at 30,000 feet. It will go down to like the numbers of the actual building. Okay, what's the current vacancy? What's the pipeline of tenants do you have? Have prices been softening or not? How are you planning to attract more people? So I think that's in the immediate term. And I think longer term, we will start to see in the office market what we currently already see in the hotel market, where if you own a building, you would go to the bank would tell you, okay, it's nice that you have a building here. Who is the operator? Who can generate demand on an ongoing basis and actually make people come back every day? Show me what you got. And most landlords don't have that capacity today. Mm-hmm. And they'll have to rely on partnerships with all sorts of these new companies that are losing even more money than them, but are still necessary and loved by their customers mostly, such as WeWork and Convene and Industrious and the Office Group and Breather. So I think those of them that survive have a bright future because the world will need them much more than before. And landlords are starting to understand that they need them.
I think in the conversation about distributed work and everyone's like, well, this is the future. I've got my home office. There's been very little discussion about cybersecurity. A lot of companies are working on very sensitive things. And the office was a relatively controlled environment.
Cybersecurity is a solved problem. It is a problem. It's a very big problem, and it's a very serious problem. But it's a solved problem. If Google or Amazon are working 100% remotely, it's a solved problem. Essentially, these companies are moving to completely trustless environments. They're assuming everybody has to log in wherever they are. Whereas in many ways, the old network was in a building. If you get into the network, you can do anything you like. The new way of working is eventually every node becomes a a point of entry that scares them. But it is a solved problem. It's a big thing in the real estate industry that real estate people tend to obsess about because they've never really thought that much about cybersecurity and they've never really thought about technology.
I want to go back to this operator model. I think it is one of the big ideas in the book and what both of you have been talking about for quite a while. But in this model that you're talking about, would that operator, WeWork 3.0 or whatever, be also responsible for leasing and all of that? So the job of the asset owner would be find my operator and then say, go forth, my friend. And that's how it works? Or what are you thinking?
So if we look at the hotel market again,
because I just want to preface that by saying a lot of these office landlords have incredibly big leasing arms and leasing teams in-house, right? And that's what they've always prided themselves on. SL Green is one I'm thinking about. Their leasing team is sort of at the front and center of their entire operation.
Yeah, so I think there'll be several combinations. So in the hotel world we see today, there are some companies that own the buildings, operate the buildings, own the marketing, own the website, own everything. There are some companies that only like to sign a lease, do certain things. The landlord then does the rest, or the landlord brings in a third party who's like a manager of the hotel, which is something, JLL and CBRE do in some cases. And they take care of, the bones of the building, the elevator, the systems, but they don't decide what it looks like or do anything that is customer facing. So we're going to have different combinations. And when you're speaking about the in-house capabilities that, let's say, an SL Green has, definitely some of the large companies will decide to become bigger and, to go even deeper into the operational world. But I think most of them will actually decide to pull back because they'll say, okay, I cannot become a Starbucks-like or Marriott-like brand with all the operation it entails. And beyond what they want, they're investors who are income investors, and those REITs, the people who invest in them, they want to own real estate that gives them their 3 or 4% dividend every year. They don't want to get into adventures.
I want to read you both a quote from Steve Roth, who's the chairman of Vornado, and still CEO somehow, magically. But I want to get your reaction on this. So in his last chairman's letter, he said, here's an idea. Wouldn't it make more sense for the largest New York landlords to get together and co-own and operate one co-working brand with one management team? Just saying. I'd love to get your reactions on that because I thought it was pretty provocative and it could be interesting.
Yeah, I mean, listen, it's nice that he's thinking that. I think practically it will be very tough because even for a brand like Marriott today, they have a lot of agreements, that even if you're a franchisee, that they're not allowed to give a franchise to anyone within a certain radius of you. Now, if you look at all the New York landlords, they're all next to each other. And if they own an operator and someone calls in and say, hey, I need 500 square feet for, my team, where do you recommend? And you have one building from Vornado, one from SL Green, one from Silverstein, who decides where do they go first and where do they go second and how to price it?
We're getting into ownership then. So what if they slice buildings up so that parts of these buildings are co-owned as well? That could be interesting.
Yeah, but then so what? You're going to start assuming that it'll be 20 or 30% of the market operated like that. So we'll have a co-op of landlords that own most of the buildings in the city. Sounds like a stretch. I mean, I also know some of these people. They don't get along very well.
True. That's true.
Much simpler tasks. So,
Antony, give me a sense. Maybe not specifically New York, but I do think if you own all the office space and it's a matter of just corralling the resources together, why couldn't that happen?
Well, it potentially could happen, but I think at this particular moment in time, there's too much advantage for the landlords that really embrace, if you like, our view of the future and start building their own brands because they're going to be different brands for different segments of the market. And the point of the market we're getting to is that everyone's not going to go up and down at the same rate. You are going to have two buildings, identical, and one is going to absolutely knock it out of the park and the other's not going to do very much. And one brand, particularly now, you see, you've got this added thing now that you've partly got people working remotely. You've got the machines leaving the office anyway. And then you've got fear and trust. people are genuinely fearful of going into buildings, and they're going to be fearful of going into buildings for some time. They need to trust the owner or the operator of the buildings they're going into, that they are operating those buildings that make them safe and with a view to my health and well-being. And there's going to be so much more concentration on environmental factors within buildings because people are going to be conscious of it. Now, if you look at all these information about indoor air quality, for 10 years, it has been a known that environmental factors can impact cognitive function. Mm-hmm. And cognitive function impacts productivity. And no one's really done much about it because they haven't had to do much about it. Now they're going to have to do it to enable people to be safe. But a big byproduct of that is they're actually creating workplaces that are going to enable people to be more productive, simply on environmental impact on cognitive function. And so you're going to, the smartest operators, I think, are really going to look at how can we really adopt sustainability, friendly to the planet, friendly to people, safe, secure, look after your health and well-being, and above all that else, we're actually going to make you more productive. Come to my building, pay a premium to my building, or you can go to that one over there. You choose. And there's going to be a big gap. This is not necessarily in the short term, and of course this is not for everybody because there's always going to be people who just need cheap space. But a lot of cheap space is going to be actually quite unsafe space. But at the premium end of the market, people are not going to go into buildings that aren't safe and healthy. So the incentive to really get a grip on this and start building distinct brands with distinct value propositions, I think is really strong, rather than just say, oh, well, it's all clubbed together.
I want to go back to that Stephen Roth quote.
Let's do it.
It's really getting me worked up. I think, when the chairman of a large office landlord says something like, why can't we all join forces and create some kind of operating company for flex office, it shows me two things. One, I think, is a deep kind of reluctance to comprehend the scope of the change in the industry. So when you're saying, oh, let's all pool our resources and create a new operator, you're basically thinking about it like a coffee shop in your building. You're saying, oh, people like coffee. I don't want to open a new coffee shop. Let's all do it together and put this little thing. It basically means you don't understand that this is your new core business. It's not like a little thing that you're doing on the side. And the second thing, based on this, is I see it basically as waving a white flag. You're basically saying, okay, this is the battle ahead. I don't want to fight. Why can't we all get along? Why do we have to fight now as new operators? Let's just all do it together. It's business here. If it's too much, make way for other people.
Well,
but also, didn't Adam Smith have something to say about owners of business colluding together and never in the interest of the consumer?
And any developer in New York or in LA or any of the big markets, zoning is their pet peeve that they can bitch about for hours, right? Yeah. So do you think zoning needs to be re-examined? Definitely.
I think even before it's re-examined, we already see that it really doesn't have the power that it assumes that it has. So both people working at home or working in co-working spaces inside multifamily projects, but then definitely, stuff like Airbnb and other things. So particularly in the US, where zoning is so strict and clear about uses, I think it would probably be good to go back or to go to impact-based zoning. So not telling people what to do, but basically telling them, okay, here you're not allowed to make beyond a certain level of noise. You're not allowed to emit beyond a certain level of chemicals. And then, do whatever you want in there. You're not allowed even to bring a certain level of visitors or whatever else troubles your neighbors. But to define it like that and then to let people do whatever they want within that.
Can you think of a city that is a little bit closer to where we need to be?
I still think that there's room on earth for large cities. But one of the problems that we're seeing now, and the reason that people are kind of not willing anymore to make that trade-off of, okay, I'm going to live in New York and pay the price, is not necessarily just because of technology or just because of the future of work. I think a lot of it is just because of the failure of the cities themselves at just being great at what they used to be great at. And when I think of the best city on earth, by far, almost like on a different planet, I look at Tokyo, which, is a very big city, but it's extremely walkable. It has amazing public transport. It's incredibly safe. it has a variety of kind of urban centers that each one of them is like a whole world in itself, like 20 or so, depending how you calculate. But if New York could offer that great public transport, that great walkability, that safety level for people who ride bicycles, even the general affordability that comes from the unique zoning of Tokyo, which basically allows people to do almost whatever they want. They don't prioritize cars, unlike in the US. So most streets don't have room for parking. If you buy a car, you have to show that you own a parking space. If you don't own a parking space, you don't get a car. Your car is yours. I don't have to store it in my city for you. So there's definitely a way to make cities amazing for people. And in theory, at least, it should be easier for cities to create a better experience than for anywhere else because they have the density, they can pool resources and do amazing things that are not available anywhere else. But most large cities on Earth just don't do that anymore.
If the shift does happen, do property taxes essentially collapse as a source of revenue or
it's going to be very bad. I mean, if they don't justify the taxes, and currently they aren't, I think they're going to start to see customers move away, and in the end, it's going to spiral down and it's going to get really ugly, I think.
So we talked about cybersecurity. In your view, it's a solved problem. The other big one that landlords bring up a lot is community, right? There's one thing where, I work at a company where I've known my coworkers for years and I have a bond and rapport with them already. So seeing them over Zoom isn't too bad. But what landlords are saying is how do you build that community from scratch? You can't. And how do you sustain that community remotely? You can't, which is why you need us.
I think they absolutely have a point. It's just the point is not quite as strong as they're making it out. It is absolutely true that the needs of building a community and a culture with a company is difficult, and it takes a lot of effort and predetermination, and it gets harder when you start having remote people. If you look at the successful distributed companies, they actually communicate incredibly at an incredible level, and they pay attention to culture in some ways more than non-distributed companies because they sort of have to. I would say the strongest argument landlords should make is not that, oh well, this is the only place you can do that. You need us because that's the only place you can do it. It's not. But their strong point is in many ways, if they provide the right types of spaces and the right types of services, it's the best place to do it. There's going to be lots of services that offices provide that you simply cannot get at home. So I'm going to go to the office because, I don't know, I need to do a podcast and they got a podcast room, or I need to shoot some video, they got a video room, or they need to do X, Y, Z, or they've got tools that I don't have.
I think the big question, though, is it good enough? It may not be the best. I don't think we're going to get studio quality sound doing what we're doing right now. Mm-hmm. And I've figured out in the last few weeks how to modulate my voice so it works optimal for this. This is not my normal speech volume, but I've figured it out. But it's good enough to work, right? And I think that's the difference. Is optimal or ideal, is it worth $60 a foot? Or $70 a foot? That's the big, scary question.
But we were positing the idea that actually people will start to be using this company's spaces for particular purposes. I'm not going to take a lease. I'm not even going to take a short lease. But I want on Mondays and Fridays to have meetings for 4 hours with 15 of our people, and I want you to provide me space for that. Mm-hmm. And I'm only going to pay for that, but I'm going to pay a hell of a lot per square foot, per time for that. But that's exactly what I want. And if I need something else, I'll buy that. So you absolutely, I mean, this is going back to right at the beginning. Of course, this is a nightmare for many investors. This is about as unsecure income as you can imagine. Yeah. But again, Dror makes the point about Starbucks. They take long leases and then they have to sell things each day. And if they can get them to buy a bigger one, they can, so if you could actually buy what you need, absolutely a la carte, think of how much. The trick clearly is filling up your space at those rates of people buying stuff by 2 to 4 hours a time. But I think that's going to happen, because I think what is going to happen is the best operators are going to start to understand their particular customer at a degree that has never been done before. So they're going to know they need that type of space, and they're going to need that type of time, and they like 2 sugars in their coffee. So literally, they start to understand their customers' needs at a level we've never done before, and then charge for that.
The true tragedy of WeWork, I think, is that it was a genius. The execution was incredible. I've been a WeWork tenant for a long time. But yes, there was a lot of drama and well-deserved meltdown of the company, but the experience of being in a WeWork, it was in many ways better than being in an office by exponentially better, right? And I think the tragedy is that company got it right and then messed up so badly. Do you think the operators will sort of come out of the ground, or do you think a lot of these existing companies, I'm thinking JLL, Cushman, CBRE, who already have property management operation experience, do you think they'll just take on more of that? Because I feel like in a situation like this where asset sales might be, because rents are not going to be as predictable, asset sales will be very complicated and may slow down. A lot of these brokerages will have to do something else. So do you think this will become potentially what they do?
I think they will. They're definitely trying to become those operators. Personally, I'm less optimistic about that. I think there's room for them in the world, but I think the leading operators are not going to be, I think, the existing service companies in the space. So again, JLL and CBRE are present in the hotel world as well. They have an important role to play there, but they're not ultimately the consumer-facing businesses. And we already live in a world where we do have companies that are great at those things. Like you said, even WeWork itself, there's a lot to improve financially, but in terms of getting what the customer wants, and understanding the market, I mean, landlords still don't get it, even though they've been shown, someone already did it and people want it, and they're still saying, no, people don't really want it. It's a fad. It will go away. Something else will happen. So,
So you think there's room for another venture-backed company with a charismatic founder? And do you think there's another story coming our way?
Beautiful hair.
Anthony, go ahead.